very important right now for you to take 1 second and hit that like button. Help push us through the YouTube algorithm. And then it's also equally as important to pound on that bell notification, hit that bell notification and click all. That way you stay up to date on all my latest videos as the inflationary depression that I've been warning about. Opinions, because I am not a financial advisor. This is just my overall thesis of the market, right? And as we get into it now, you can see the XRP price.
Crypto investing. I tried to do an update earlier at work on my lunch, and somehow it didn't save on my phone. I just did not have the time to try and go redo the video. But we went over some of the gold chart stuff, but I'm only going to be able to go into this briefly right now. It was a great video, but you can see what happened here in the gold chart spot price is we had this big 13-year cup and handle. You see we had this pump, and then the bottom of the cup, and if you draw it like that, that looks like a cup, right? And this was a 13-year pattern from the old financial crises back in 2008 to 2011. You had your big peak, then you had your consolidation, and then you had your dump, and your big bear market, 10 years, right? Then we had that big cup and handle, and this was the handle right there, right? You see that? And that's where you came up to your previous all-time high, and then had a down and sideways consolidation in this falling channel, which was the handle, and then you had your attempted breakout right there, but you got rejected. And usually when you get rejected like that on a big macro 13-year cup and handle pattern, it usually tells you the price is going to come down. In a bear market, you're going to have a big reversal, and we've actually entered into a bear market in the spot price on gold, and we're in a major bear market on a lot of the mining stocks. But you can see we were down as much as 22.69% the other day, and at current price nearing the close, the weekly close, we're down about 20.5 to 20.54%. And you can see I had that 2 right there in green, right on the 200-day moving average in the daily time frame. You see that number 2? That was where I had marked when the price was up here. If it ever got back down there, or when it did, if it did, I was going to buy some gold. I bought 1 ounce of gold there 2 weeks ago when gold was at about $16.75, so under $1,700. And then I bought 20 ounces of silver when it was below $18, and then it rallied after that. Now it's starting to come back down again, right? But the gold chart, if it does something that it could do and come all the way down here towards that, not quite that far, I don't think it could come down there, but it could. But coming down into this range of about 1,500, if we hit 1,500, 1,450 to 1,500, I'm going to be buying another ounce of gold there, because I think that would be a very good buy. Looking at the pattern, and you can see why we're targeting that area. If you look on here at the bottom part of the cup and handle, the handle part that has come back into, you can see that's about 1523 down here at the bottom part of that. And I'm playing that as a possible area that the gold price in the next couple of months could come down to, and that would be a great spot for me to buy another ounce of physical gold. I have a bunch of mining shares. Obviously, GPL has not played out anywhere like we would like, but we have multiple other companies with lots of shares that pay dividends, and all we need is one of those to do good here in the next year or 2 or 3 or whenever it finally pops, and we'll recoup some of our money. But you can see the silver price has come way off of its peak back here, up around $28. We're down about 50% because silver is not only a monetary metal, it is an industrial metal that it is used more. It's used more of in the industrial metals, and you can see we hit that 78.60 Fibonacci retracement. And now usually what happens when you come down that far and you come down to a major area of consolidation down here, you see that before the COVID dump right there, we have this big consolidation, and that's a major area where support should be in and around that blue box. That's why we have it there. And whether you consolidate here like you've done, where the price is trying to stabilize as you got the price trading sideways, even if you break down and come down and you have this sideways consolidation and you break back into here, there should be a major consolidation range here, and this should be a big accumulation zone. If the price of silver doesn't indeed come down that low, that would be a big area for you to accumulate silver, right? Because if we look back out at the bigger chart, You can see this recent pump that we're on with our industry exclusive purchase. Oh wow, how fast are you fucking going, buddy? There you go. Doing fucking 80, and that is why your car is all fucked up. You don't know how to drive. But you can see if we take our industry exclusive purchase tool out, what the fuck? This guy's just swinging all kinds of rocks at me. Fucking frick. You can see back in that 2011 hysteria with the financial crises, you can see silver pumped up to $50, right? It got way up there, and then it had a huge sell-off. But then we were in this big trading range back here. You can see even on the previous pump, we got up into that blue traded area of about $20, and then we got rejected, a big harsh rejection back in 2008. And this was the beginning of the financial crisis. You can see silver went down from about $20 all the way down to $8, almost to $8. That's a big sell-off. Then we had the massive rally, and then after notice the consolidation there, the sideways consolidation, and then the crash. We traded sideways in this blue trading zone from about 2014, right, all the way until the COVID dump in 2020. So 6 years of a consolidation between the prices of $14 and about $20. We were in that range for quite some time until we had this big pump up during COVID. Now we're having a big sell-off. But I do believe silver, yes, it is possible you could come back to a mean where we've come back down to several times, going back almost 100 years on this chart that I made out for you. This is a beautiful chart that I did a long time ago. And you can see we got lots of points and lots of dates going all the way back to 1972. And you can see how thinly traded the silver market was back there in 1803 to 1932. It almost looks like it's a foreign. Look at that. I mean, there's not a lot of volume. But then from 1970, the volume really started to pick up. And you can see the several peaks and valleys silver's had all the way back to the 1800s. But every time it has a big run up and then an 80 or 90% crash, then it has another big run up. You notice that? You see this? Look at back in believe this or not, back in 1980, we hit $50, right? Then we crashed all the way down in 1992 to $3. And then we had another great run up in silver all the way back to $50 in 2011, and then we came all the way back to $8, right? So you could come back to this mean right here because you often do touch that mean, but every time you come back to it, price of silver is considerably higher. From when it hit it the first time in 1972, it was about $1.20 silver. Then when it hit it in 1992, right? See that? 1992 right here. When it hit it back there, it was at about $3 a share. So that's a 200 plus infold increase from the first time it hit it and had a big run up, and then when it had a big crash, and then it hit it again in 92, right? And then when it hit it in 2021 at $8 during the COVID dump right there, you can see that. That's a marketable increase from the $3 it was at in 1992. So you see how that plays out in the price of silver. You have big pumps and you have big dumps. A lot more volatility than gold, because gold is used in industry, but it's not used as much in industry and obviously jewelry and such. But it's mostly a monetary metal, right? For preserving your wealth metal, and you can see that. So that's what we're watching out, because I do think eventually silver, whether it's next year, 2024, 2025, 2026, or 2030, I think we're going to eventually make another run back up to that $50 all-time high, and I think eventually we will take out that all-time high. It's just a matter of when, not if. I think it's going to happen. I just don't know when it's going to happen. And then as we look at some of these other stocks, obviously GPL, they're not bankrupt, but there might as well be when you look at your stock price. But I got other companies that if that one does go bankrupt and I can never recoup any of that money that I'm down right now. B2 Gold, I have a lot. I'm getting a nice dividend payment. I have been accumulating this for quite some time, and you can see it's almost come down to an underneath target that we had at the mean of the volume right there at $2.79 at the mean of the volume in Bitcoin or in B2 Gold. And this is an area that I'm going to buy more. I did buy more when it hit down there, and if it comes back down there again, or even worst case scenario comes down near the COVID lows, I'm going to buy more. But I think eventually this stock will come back up to that $7 and we'll eventually breach that $7 sometime in the future. And just if this comes back to 650, just B2 Gold alone with the shares that I own will make up for all that money that I potentially may lose in GPL. Just if this one, or when, not if, but when this one, and eventually one day when I'm sitting here talking to you fine, lovely, beautiful people, and it's sitting up there at $7, that travesty that is GPL right now will be all made up from the gains that will be made in B2 Gold. I think this is a great company to buy. It pays a dividend. It's not like the junior miner that I was speculating on, and I made that in forefront now to the public that GPL was a speculation and very risky because it was a junior miner. But B2 Gold was a solid company that pays a phenomenal dividend, and it is not a junior miner, it is a senior miner, and it is far less risky. And then I got Kinross, which is down right now, and it's another one that pays a nice healthy dividend, and I've been accumulating this on the way down, right? My average cost per share is like $5.25, so I didn't buy it up there at $12. I didn't buy it at $24, but that was a long time ago. But I didn't buy it when it was at $10 recently. I bought it when it was 50% down from there, and from its old high after the 2021 rally. And then I'm going to hold this and accumulate. Could it go lower? Yes. Could it go to $1? Maybe. I don't think it will. But I think eventually this one too, sometime in the future, I'll have some reward for my patience on this, along with AEM I own, and that also pays a nice healthy dividend of 3.44%, right? B2 Gold upped their dividends recently to 5.03%. Fortuna Silver, I have a lot of shares in that. It does not pay a dividend. Pan America Silver pays a nice healthy 2.35% dividend. I have quite a few shares of those. And of course, the Kinross, a 3.11% dividend. And I own multiple shares, hundreds of shares in each of those companies. Like, subscribe, and share. I hope this gold update gave you some insight and some education and helped you to make your profitable trades into the commodity market. Peace and love, my beautiful audience. And as a reminder, patience is a must when you're trading stocks or crypto.